we're now halfway through 2025, and a lot of interesting things have already happened. We've had Liberation Day, we've had the Diddy trials, we've had US bombing Iran, but one thing that has been historic from a market perspective is we achieved the fastest recovery of all time after a 15% recovery. So we ran through all the data, and we wanted to go back to 1957 and look at every stock market drawdown of more than 15%, how long that took, but more importantly, how long it took to recover once the market hit a bottom. And again, after the terror fears and Liberation Day, the market fell almost 19%. And that took 34 trading days. So it was a really scary time, a lot of uncertainty. A lot of people, I think, pulled their money out of the market, were really worried about the future. But what that led to is the fastest recovery that we have ever seen. 54 days from when the market fell and bottomed in April to hit all-time highs. So with these, we also like to just, again, look at history, especially recent history that we remember of recent downturns and how long it took the market to recover. So if we look at COVID-19, the market fell just under 34% in 23 days. And again, talk about scary, but then it took about 102 trading days for the market to hit all-time highs for clients if you stayed in the market to recoup your money and start making more. We all remember the Great Recession, 2007. Market fell from peak to trough about 57%, and that took about 355 trading days. And then again, to recover, it took over 1,000 trading days. So that is the third slowest recovery that we have on record. And then let's look at two more that we'll kind of remember. The dot-com bubble, market fell 50%. That took a long time, 637 days. So that started early 2000. It went into 2003, and that took around 1,165 trading days to recover. But the longest recovery on record here is when we had the OPEC crisis. We had Watergate, just a long recession. Market fell just under 50%. And that was over 436 trading days. It took over 1,400 days for clients to get their money back. So a couple takeaways from this would be the market has recovered 100% of the time. There's not many things that happen 100% of the time, but we can go back in history and say the market has hit all-time highs after recessions, after bear markets, 100% of the time. And as it pertains to these numbers here, if we go 12 months out after the market's recovered, 92% of the time the market is higher, with an average performance just about 11%. So there is still opportunity for the market to continue to go higher. And one of the other catalysts that we could see is there's just still so much dry powder on the side in the form of money market funds. As of end of first quarter 2025, about $7.4 trillion is sitting in these money market funds. One of its reasons the average yield on those is 3.8 to 4.2%. So clients are getting paid historically more than they have from 2009 to 2022. But again, these are liquid. People can easily liquidate these and then move into the stock market. And that gives us confidence that the market can continue to go higher. So with Off the Charts, we just try to give you the data to make informed decisions and, most importantly, stay in the market and stay optimistic. Thank you for tuning in, and we'll see you next time.